Hey, what's up? This is Dan Bauer here. I wanted to talk about a few things going on in the market right now. We'll take a look. So right now, the fear and greed index, which has been pretty high the last couple of months, I'd say since like December, it's been riding that extreme greed level, and optimism based on like rate cuts and economy doing well, and everything seemed to be going well. Of course, people were buying into the market and people were all bullish and everything like that. And I'm not saying that it was a bad thing that, a lot of people were making money. But let's talk about it. Let's talk about what the market's doing. Let's talk about a few other things. That's when we get into here. So the fear and greed index is at 31, right? It's at fear, right? Now, the last time we were in this zone, it was we slid down into this zone was late September of 2023, right before October. We had that big dip in the S&P 500, and okay, so right at the end of September, you had exceptional buying opportunities, right? But even more so in the whole month of October, you pretty much had exceptional buying opportunities in most stocks. If you bought Adobe, the middle of September, or the middle of October rather, uh, you know, you might be a little upset with where it's at because it was like if in the middle of October, I think it was trading 550 to 570 zone somewhere in there, right? And now it's trading at 460 or something, right? But if you got it, at some point it was at 600 something dollars a share. For a little bit, it was playing around in that zone. But let's not just. I'm not here to talk about Adobe. I'm just giving an example. So now we're what 31, and we're sliding back down. Do I think we can go lower? Oh, for sure, absolutely. This ain't the bottom. No way. But you're getting to that zone where it's like, oh, there might be some good opportunities out there in the market. There might be some good stocks to buy. You might want to get into, a dip on like an Amazon or a Meta. And you might even want to wait a little bit longer. But, Meta's earnings are this week, and so we don't know how that's going to go exactly. But and we couldn't tell you what the price action is going to be. But what I could tell you is that they're probably going to beat. And what also I can tell you is that they're trading too. Meta is just trading too cheap, too cheap. I mean, so let's say Meta takes a big dip in a stock and it goes down, let's say to 400 or high 300s. Then Meta's trading at literally like a 17, 18 4 P at that point in time, probably even less. Let's think about it. If it's trading around 480 right now, right? And it goes down 10%, which would be about, I'd say, 10% would be 48, $50. So, and 10% of the PE would be 18. So, like, if it went below that, yeah, it's going to be a 17, 18 for PE. I mean, for Meta, it's going to have a 25% revenue growth. Now, we know that their net income has been just crushing it lately, but we'll talk about that later in the video. I want to say, so market momentum, is at neutral right now, right? It's sliding down. And then you got stock price strength is in the fear mode. Then you got stock price breadth, also fear. But what I'm looking at big time here is the put and call option. So the put call ratio here, right, is getting to where that October was. It's sliding down. We're at 99.99, right? A couple times in October we had, this is the end of or this is August. And we had a 1, and then you had that little bounce into September, and then October it went back up to 1.08, and that was a great time to buy stocks at the end of September into October, right? And then another chance near the end of October, and you went well above 1, right? Okay, and that is starting to shape out here, right? And you have your market volatility is extreme fear, and then you have safe haven demand, extreme fear. I don't know what to tell you, but this is when you start like coming in. I wouldn't say, real heavy, because this is just the beginning. But we don't know what's going on with Israel. and Iran. Now, I do know that it's fake. How do I know it's fake? Let's be honest. Who tells the other country that we're going to shoot missiles at you? And this is what time we're going to do it. And this is where we're going to shoot the missiles at. So you can shoot down all the missiles. Don't shoot them all down. Miss one. Miss that one on purpose. But we're going to shoot it somewhere that it hits nothing. We don't really want a war. We want an illusion that we're in a war. So we can do what? Raise oil prices, mess up the trade, kind of mess everything up. Run inflation a little higher. Put the squeeze on people, right? Think about it like that. Now, but how can we take advantage? How can we take advantage of this situation, right? I have a freaking answer. So what we're going to do is we're going to take us a look. We're going to take us a look at Meta here. All right, so basically what I'm going to do here is we have Meta here, and this is going to be the revenue, right? So expected revenue for the coming quarter is going to be $36 billion. Do they beat it? Maybe. I don't know. But that's not the point of what I'm trying to say here. We'll talk about revenue here for a quick second, right? The last 2 quarters, we had 23% revenue growth and 24%, almost 25% revenue growth, right? Okay, all right. Now, Q1 of 2023 was $28 billion, right? And this $28 billion is such an easy comp to beat. I mean, think about it. So $28.64 billion. Now, to have a 25% revenue growth, you need to have somewhere around mid 35 to $36 billion, and that $1 billion revenue quarter. And that would be a 25% growth quarter year over year. Are you kidding me? Right? Now I'm going to go into this a little deeper. Net income increased by 145%, 163%. And look at Q1, right? Think about that. Look at the comp year on year here. We're looking at a $5.71 billion net income. And Meta's been just accelerating. Think about what Llama 2 is doing or Llama 3 is doing for them. Think about how everything's been going for them lately. Now, I know that the economy is getting a bit tougher. So, have there been ad spend pullbacks? Maybe. And maybe not. But Meta's been not just focusing on the ad side for revenue and net income purposes. They just did a partnership with Google on this Llama. Llama 3. And if we're thinking about it, what's 100% revenue growth? 11.4 billion, right? 11.4 billion. Well, in Q3 of 2023 they had that, and they were 163%. And the last quarter was 15 billion. I'm thinking that they're probably going to pull up in between 15 and 11.5 billion, probably somewhere like 13 or 14 billion. But it could even be better. They could wow us. All right. But so I want to look at another thing here. Let's pull up where Meta's trading at a 20.614 P, right? Jeez Louise. 25% revenue growth coming and 100+% net income growth for sure coming year over year, and this company's trading at a 24p. What? You've got to be freaking kidding me, right? That's just way too cheap, right? And so this market pullback has pulled it back, and let's say it continues into Monday, and Meta loses another $7, $8, $9 a share. Right, maybe $10 a share. This pulls it right about 20 on the forward PE. I mean, we're talking like way too cheap. I want to type in. Let's just look at Adobe. Adobe is not posting the same revenue growth. by far, and they're trading at a higher forward PE. By far, Adobe is not putting in the same revenue or net income growth. And in fact, because of their, what was that, Figma failed acquisition, Adobe had to pay back some money. So they had a negative net income growth. Let's look at Broadcom. Now, Broadcom's numbers might be a little skewed based on the fact that VMware added revenue growth to the company, but it hurt their net income growth because they had to pay out. But we're talking a 24 P. They're trading even more. They're trading even higher than Meta. Let's go back and let's take a look at Broadcom, right? Broadcom, where's that search bar at? Let's go here. Broadcom is trading at the same forward PE as Meta. Now we're in different industries here, but I'm just kind of giving you a comparison to why I think Meta should be trading probably near 30. Like, is there 50% upside? Let's forget that. Should Meta be trading at 25 forward PE? I think that's freaking reasonable. I think that's absolutely freaking reasonable, right? At the net income growth and the revenue growth, it's incredible, right? Okay, so, this past quarter, Broadcom grew at 34%. VMware acquisition. Let's look at the net income growth, down 66% because the Broadcom or the VMware acquisition. But what was the year-over-year growth of Broadcom prior to VMware acquisition? 4%, 4%, 7%, 15%. So when we think about that, why are they trading at the same forward PE? How are they trading at the same forward PE? What? As Broadcom talks about in their last earnings call, weakness in their business. ASML came out and said in the past quarter, weakness in their business, we expect to be basically flat with a pickup in 2025. Okay, all right, we're there. So all sectors are pointing to a slowdown in the economy and business and so forth. So we might have a really good size pullback coming. This is not time to squirt your load all over the place, but should be very, 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 very observant of what's going on. Now, I want to talk about this. Look at this. NVIDIA down 10%. Look at this. The semiconductor, sector here, right? NVIDIA down 10%. Broadcom down 4%. AMD down 5%. Qualcomm down 2%. Intel down 2%. Texas Instruments, Micron, so many, all these companies down huge, right? Are we having a sector rotation? We could be. It's crazy to me, but we could be. Look at Eli Lilly. Now that's mind-blowing to me. Not that Eli Lilly is, that's not what I'm talking about. I meant, not that Eli Lilly is trading way too high. I mean, they're doing great, but that's not who I wanted to talk about. I'm talking about Lululemon getting smoked recently. But let's look at Microsoft. Microsoft down 1.2%. Adobe down 1. Synopsys down 1. Adobe down 1.7. Synopsys down 1.7. Palo Alto's down a lot. You really only had 1 or 2 or 3 green people or stocks in technology, right? Let's look at Apple. Apple down 1.2%. Google, Meta got smoked with a minus 4.13%. How much further can it go? What happens to Meta here, right? Think about this. What happens to Meta? Let's say it does go down. I don't know. Another 5, 10%. What if it goes down 10%? Where's Meta trading at 10% down? So from 480, 10% is somewhere around 50. So 430, right? If Meta's trading at 430, they're trading at 18 forward PD on what? Like, that's such a buy. Such a buy. I don't care that it's gone up so much. How much further can it get pushed? Down to the floor. Let's think about that. How much further can Meta go into the floor? What if it goes into the 300s? What if it goes into the 300s? Whoa, we're talking, a 15.4p on Meta? What? What a buy, right? What a buy. If you ain't got no Meta shares, bro, I ought to tell you. Now we're gonna go to Meta, and we're gonna talk about their upcoming quarter's estimates. So their revenue estimate is 3.6 or 36.14 billion, which would be about 25%, right? Year-over-year growth. I bet they beat. But even if they don't beat, how are they trading so cheap, right? Their EPS gap estimate is $4.31. Well, let's go back to what they did. Let's go back to what they did in the prior quarter, right? Where's it at? It's somewhere in this article. So last quarter's earning, they had $5.33, and it was a rather large beat by 39 cents. Revenue surprise beat by about $1 billion. So are they going to beat again? Is this a setup? This is a great setup. What if it goes down after earnings? What kind of a setup is it then? Oh my goodness. What if they have great guidance? Could Llama 3 help this company go over 40 billion every quarter this year? Maybe. Near 40 billion? Because, this next quarter, not. But what is the guidance looking like? I don't know. All I can say is this, is that Meta's going to crush it. Let's just read some of what they said. So, this Dare sends, I can't even say his name, Dyer. We'll just call him an analyst. Summary. Meta stock has outperformed the broader market since January 24 and is still attractively valued. The company's latest quarterly earnings surpassed estimates, with strong revenue growth and tripled adjusted EPS. Wall Street analysts are optimistic about Meta's upcoming Q1 2024 earnings release, expecting significant growth in revenue and EPS. My target is 587, this guy says. I don't see why that's a bad target. I mean, what's it trading at? A 25 PE at that target? A 4 PE at that target? Yeah, I mean, it's almost hard not to want to buy it, even at these levels. But we'll see how everything shakes out this week, how the market's going to look, and all these things. So he puts in, my previous bullish thesis about Meta platforms aged exceptionally well as the stock outperformed the broader U.S. market by a wide margin since January 2024, right? And then we'll go there. There were several developments over the last 3 months, and today I want to share my opinion about them and update my Meta target price estimates. Wall Street analysts are quite optimistic about the company's further monetization potential from the cost side. The company continues gaining efficiency and recently announced new round of layoffs will add $30 billion. And recently announced new round of layoffs will add $30 billion value to shareholders, according to my calculation. The company also joined the generative AI race with its freshly released Llama 3 language model. Alongside an image generator, my valuation analysis suggests that Meta is still attractively valued with a price target of 587. All in, I reiterate my strong buy rating for Meta. Recent developments. The company released its latest quarterly earnings on February 1st, surpassing consensus estimates both on the top and bottom lines. Revenue growth accelerated in Q4 to 24.7% on a year-over-year basis. The adjusted EPS almost tripled from $1.76 to $5.33. With the new round of layoffs, I'm going to assume they're probably going to beat earnings, probably going to be somewhere in the $37 billion range, I'd imagine, right? Strong growth in a lot of their categories. Is Meta a real setup? Is Meta like one of the best setups in the market right now for an investment? for a trade, even if it's short term. Now, I wouldn't just go out and buy next week's call options or 2 weeks out call options. You don't know what's going to happen with the market. You don't know how the market could react. What happens if you do buy calls and you get smoked because it comes down? So we'll talk about that. Strong EPS dynamics ensured stellar Q4 free cash flow as well. The company generated $8.3 billion in levered free cash flow in Q4, which helped Meta to further improve its financial position. With a $65 billion cash pile and low leverage, the company has a great potential to exercise financial flexibility in case new investment opportunities emerge. Considering Meta's stellar past acquisitions like Instagram and WhatsApp, there's a high probability that the management will be able to continue investing profitably. And if we know what we know, there is absolutely no reason to doubt Meta. Total cash on the balance sheet being $65 billion. They're doing absolutely incredible. No short-term debt to speak of. They got a total debt of $37.9 billion, but twice as much in cash, nearly twice as much in cash. It's absolutely crazy what they're doing. It's great. Okay, I'm not paying much attention today to the latest report because Q1 2024 earnings release is approaching as it is scheduled on April 24th. Wall Street analysts seem to be extremely optimistic about the earnings release, as there were 29 upward EPS revisions over the last 90 days. Quarterly revenue is expected to be $36 billion, which indicates a staggering 25.7% year-over-year growth. The adjusted EPS is expected to outpace revenue growth and expand from $2.20 to $4.38. Okay, all right. So, all right, it was $5.33 last quarter. They announced another round of layoffs. So that's going to affect this quarter. They have been continuing to get more profitable. I think they're lowballing EPS. I think the EPS is going to get smoked. Now, I might be wrong, but I think they're going to smoke EPS, and it's going to be higher fours and $37 billion in revenue. I think they beat by another $900 to $1 billion revenue, right? Okay, we'll read some more. According to Truist Securities, Meta is expected to beat Q1 consensus estimates, and the bank also raised its target price from $525 to $550. As Truist analyst Youssef Squali suggests, the upgrade is thanks to the improved monetization and a strengthened must-buy status within the digital ad ecosystem amid ongoing cookie depreciation and a volatile macro. Citi's optimism about Meta is even stronger as the bank recently upgraded their target price from $525 to $590. Ronald Josie sees no negative impact on Reels engagement despite rising advertising loads, which likely means even more monetization potential for this video format. Okie dokie. I tend to agree with Truist and Citi's optimism. The operating margin dynamic is improving rapidly after the company announced its year of efficiency in early 2023. The metric is heading towards its stellar 2021 levels and plans a 10,000 headcount cut. That's huge, right? Which was announced just a couple of days ago. So this might not affect this past quarter, right? Okay, I was wrong, but this will affect the coming quarters and in a major way. 10,000 headcount? Wow, they're really using this AI to their advantage, aren't they? Right? This will highly likely boost profitability further in the same piece of information. It also says that the company will leave 5,000 roles that are currently empty unfilled, according to comparably.com. Average salary at Meta is around $140,000 a year. Wow, that's a big chunk of dollars right there that they're going to take off the balance sheet. My calculation suggests that they're going to add to the balance sheet, Calculations suggest that this round of layoffs will save Meta net 1.15 billion per year, which results in a 45-cent annual EPS improvement. Considering 2.55 billion outstanding Meta shares and the current forward P of around 25, which it's actually around 20, let's be honest, the layoff creates around 30 billion total value for shareholders. Okay. That's all I got. But what I'm saying here is like Meta is a huge opportunity right here, right now. And you know what? You're getting a freaking bargain still. If let's say you buy shares at these prices and you hold for freaking a year. Let's just say you hold for a year. And everything tends to be okay in the markets. $240 is $720 from this point. $720 is 50%. 50% puts it at a 34 PE. Then it's trading probably at an average value or a fair value-ish. Okay. When we think about that, what if you only got 25%, and that would be a 25 forward PE, and that's very justifiable, and you get 25%. I'm not saying that's a bad freaking deal, right? Heck, that's better than inflation. Inflation eating you up right now. I don't know. That's just my thoughts. Let me know what you think in the comments section. I'm not a financial advisor. Please subscribe and hit that like button. I want to make more videos. I want to dedicate myself to making more videos. Thanks for watching if you're still here. I appreciate it.